If you're watching this video today, it means you're more than likely looking to get pre-qualified. You're starting those initial stages. So whether you're working with a realtor or not, you're trying to learn more about getting pre-qualified and what that process exactly means, which is great. And a lot of times I tell my clients that it's not necessarily what you can qualify for, qualifying for the maximum amount that the bank will lend to you, but it's more about your personal comfort level. And I really want to stress comfort because we don't want to get you into a house or qualify you for more than what you're going to be comfortable for in looking at purchasing a home. So when getting pre-qualified, the comfort, the two items that I see is first, or that I want to address, is first, down payment. So how much money is going to come out of my pocket to get me into this house to where I'm not strapped for cash and I don't deplete all of my assets to get into this house, because we want to keep reserves just in case something were to happen. And then number two is how much are my monthly payments going to be and what's going to be comfortable for me for that. So you want to assess basically what you're paying for rent right now, how much you're saving a month right now, and compare that with what you think will be a comfortable house payment moving forward. And in future videos we'll talk about the benefits of renting versus owning. There definitely are some tax benefits to own a house, so that can kind of narrow the gap between renting versus owning. But we want to establish these two items to make sure that you are comfortable. That's a terrible arrow there. But we want to make sure that you're comfortable. So in getting pre-qualified, there's three things that we're going to look at. The first is going to be your credit. The second one will be your income. So income, and then lastly is going to be your assets and how much money you have to put down. So credit-wise, so if you're just getting started, credit-wise, we're going to look at your FICO score. A FICO score will range from 300 to 900. The minimum score that we're going to require is 620. Typically, you're going to want to have 3 trade lines. There's exceptions to this. I'll shorten trade lines there. There's exceptions to this, but if you're just getting started on getting pre-qualified, I would say open a couple accounts. Talk with someone on our team, talk with the Miksta team, and start to address what exactly you need. But typically, you want to have 3 trade lines of 12 months or longer. Again, there are exceptions around that, so get in touch with us and we'll figure it out. Now, in addition to your credit score, there's also going to be some other things. So any like judgments or liens, those are going to have to be cleaned up prior to purchasing. So even a super old tax lien, we have to show that that's been resolved or pay it prior to moving into a house. Other things that'll show on your credit, if you have any bankruptcies, those obviously will pose an issue. Chapter 7 or Chapter 13, there's time requirements on those. Foreclosures and short sales. And actually we have on the MikstaTeam.com website, we have length of time requirements for bankruptcies and short sales. And there's extenuating circumstances on these, but you do want to understand, because even if you have a 700 credit score, some of these other things might prevent you from qualifying for a house. And then the last thing that's going to show up on your credit is going to be your debts and what your monthly obligations are. And that's going to be compared to your income, which we'll get to here in a second. So income-wise, we're looking at your gross income, so not your net income. It's going to be your gross income, which will come directly off of your W-2 form. If you're self-employed, and even regardless if you're self-employed, we're going to probably need tax returns. So we're going to ask for your taxes, and any more, even if you're W-2'd, if you have like rental properties or a small business that you might own on the side, your taxes are going to be pulled out. We file transcripts with the IRS. We're going to look at those. So we're looking at your gross income though, and then what we're going to do is we're going to compare these debts versus income in a ratio that you've probably heard of, which is debt versus income, a debt to income ratio. So let's say, and I'll do a quick description on debt to income ratio. So let's say that you have a car payment of $250. I'll draw this car here. It's a terrible looking car, but $250 for car payment. We've got another $150 in credit cards. So another $150 in credit cards, and then we'll say $100 in, this is a book, in your student loans. So we've got total debts, monthly debts right now, and obviously you're paying rent too, but we're just looking at it when you own this house. Total monthly debts of $500 a month, and let's say you are comfortable with a $1,500 a month house payment. So there's your house payment. So your total debts will be proposed at $2,000 a month. Let's, for simple sake, say that you gross $60,000 a year. So that's divided by 12, right? So divided by 12 months will give you $5,000 a month in income. So the debt to income ratio is a pretty simple calculation. You're just going to divide your $2,000 in total expenses for the month by your gross income. So 2,000 divided by 5,000, so we're looking at 40%. So this is your debt to income ratio. Now, everybody is going to have, again, it ties back to the comfort level. Everybody's going to have a different debt to income ratio that's going to be comfortable for them. So we can qualify some borrowers up to, even in some cases over 50% debt versus income. That might not be comfortable for somebody. So you want to understand, again, not only do we want to get you pre-qualified, but make sure that this payment's going to be comfortable for you, so we don't get you in, extended over your head. The last thing that we're going to look at is your assets, and what we need for assets. We need enough money to put down on the property, and depending on the loan program, we'll go into each of these in future videos. But FHA, so down payment of 3.5% is what's required for FHA. Conventional, you can actually do 3% down now, depending on credit and everything. 3 to 5. At 5%, it'll open up a lot more options for you. And then VA is actually one of few where you can actually do 0% down if you are a veteran. So these are going to be the requirements. We'll get into in future. 20% down is going to eliminate mortgage insurance, but we'll talk about that in future videos. On top of your down payment, though, you're also going to have to worry about your closing costs, and those may or may not be paid by the seller. So you might not have to come in with that. There's also ways we can structure the loan through the interest rate where we pay for your closing costs. So a few different ways to structure it, which again we'll get into in future videos. And then the last thing is reserves. And these may or may not be required, just depends. But obviously, you don't want to put your whole down payment into a property and then have no money left in the bank. So reserves, what that means is, in some instances, like on conventional loans, we need 2 months reserve. So if we take your house payment of $1,500 a month and we just multiply it by 2. So $3,000 in reserve. So your total assets that you would need would be it could be extra than the down payment. So not only do we need our down payment amount, we also might need money for closing costs. We also might need reserves, and these all will go into getting you pre-qualified. So now that you know what exactly we're looking for, we're looking at your credit, we're looking at your income, we're looking at your assets. There's paperwork that we'll get from you to review and make sure that we have sufficient of all of these to be able to get you qualified. And at that point, if you get pre-qualified with the Miksta Team, what we send out is a spread of, say 200,000. So 200 to 300,000, and we'll send different payment options at 200,000, different down payment options, different loan types, with that range from 200 to 300,000. So again, it comes back to being comfortable and understanding what amount you need to put down and what's going to be comfortable for you to put down, and then what amount your monthly payments are and what's going to be comfortable for you on a monthly basis. And at that point, what we will also send you is a pre-qualification form, because you are now pre-qualified to go out looking at properties. So we want to take this pre-qualification form, we'll send it to your realtor or put you in touch with a realtor to where you can go out looking at properties. And while you're out looking at properties, you'll have this spread of 200 to 300,000 or whatever your price range might be to reference off of and be able to say, okay, I found the house, this is where my payments are going to be, this is going to be comfortable for us as a family moving into this house.